see yesterday we finished up the topic of special cases of valuation. No, we finished up the other non-discounted methods. Today we are pursuing towards special cases of valuation. We're talking about how do we value things. So on the basis of special areas. So let's talk about it in detail. Special cases of valuation. Matlab, what is the difference between the special cases of valuation and others? We're talking about it from the point of view of the business in such a way that we are talking about the different businesses. When there are different businesses, every business has a different kind of way of working towards it. Real estate has a different one, and the other businesses have a different way of working too. So the models and the working would be slightly different in the special businesses. So we have to look forward towards all those areas. And plus, this particular chapter also includes CAPM model. What do you mean by CAPM? Capital Asset Pricing Model. I always find this particular model very important for the examination. What is CAPM? CAPM says that is risk-free rate of return. If I am working in the specific field, I'm investing in a specific area, there's a risk-free rate of return. If there is no risk involved, there's a specific rate of return that I'll definitely make up. Then plus, what do we have? Risk-free rate of return. Then we have the beta. Then we have RM minus RF. Matlab, this is the market rate, and this is the rate of the risk-free rate of return. There is one area where we have risk and the other area we do not have risk. So technically, if we talk about this specific area, we are talking about risk-free rate of return, and then RM minus RF relates to the particular area where actually there's one more point, that is beta. Let me give you an example. This is too boring to explain in terms of the specific formula itself. Risk-free rate of return is basically say if there's no risk involved, I will make minimum 10% from the market. And beta is the sensitivity factor. For example, if the market changes by 10%, then our industry or our specific organization changes only up to a good limit, not the exact way. So then that is beta multiplier. Take it, sensitivity that you have towards the industry or the external factors. It includes a lot of things, and I believe this can be asked in the examination this time as well. So we will have a specific beta. For example, if the market changes, we chase twice of it. So let's take it, the beta is 2. And then the market rate, including market rate always includes a risk area. According to that, it is right now at 16%. 16 minus 10%, what are we having today? It is 10% plus 2 into 6%, So this is going to be 10% plus 12%. It turns out to be an effective rate of 22%, everyone. This is your capital asset pricing model where you're trying to find the returns overall. This is your CAPM model, capital asset pricing model. The name of this model is capital asset pricing and model. Got the point, everyone? Simple, easy, and scoring. Achha, now let's study. What are we going to do today? We're going to study about all these points. This was also there. This topic I had also discussed in the 32-hour special classes which were going on during Republic. Now, go through that particular session. I've discussed all this point there as well. Okay. Acha. Now comes the next point, everyone. What is the primary challenge in terms of valuing intangibles? Acha, the basic problem is the special cases of valuation deals with the organization from this point of view as well. Acha, what do you mean by this, everyone? Matlab, I find this particular thing very interesting that in an organization which is this is something which is intangible assets are non-monetary in nature. How can I value the goodwill? How can I value the specific relationship of any specific area towards the market? Isn't it? Can we do that? So this is definitely a little difficult part. So how do we work in this specific area, everyone? When we talk about the entire area of intangible assets, goodwill, patents, copyrights, trademarks, super important. Determining their market value is difficult. Isolating and assigning the monetary value or analyzing their impact on cash flows or comparing them to those are tangible assets. Actually, there is only one thing which is difficult, that is to find out their monetary value. they become a very strong reason that the organization changes a lot. There is a very strong way due to which the organization is able to value itself. Because the point is, when we talk about the monetary value, it is very hard to find the monetary value of the reputation, trademark, copyrights. You create it, and individually to find it out is definitely a challenge. Okay, why might the capital investment approach not match the market value of the intangible asset? It is too subjective. It is capital investment approach is different from market value. It is based on discounted cash flows. Nope. It relies on historical expenditures, or it does not follow the accounting principles. Nothing can survive without following the accounting principles. Gone are those days where they could be very casual about it. So in this case, it is too subjective. The relationships are not very clearly defined, so then probably it becomes very difficult to find that particular part itself. You know? Let's talk about the particular question now. What is the consideration in estimating the anticipated cash flows for real estate investments? Acha, real estate is here again. Historical trends in the real estate market, anticipated cash flows, length of asset lifespan, then potential depreciation of the market or level of liquidity in the market. But then when we talk about the real estate is based upon the comparisons a lot. That means whatever is going in the market, we would go as per that particular area itself. But the point is, one particular thing which will always be dependent is what happens to the life of that particular asset. If I have a real estate, I have a building, but the older the building, the lesser would be the price I'll be getting. No doubt I'll be getting more money when it comes to the land. The value of the land increases, but the value of the building decreases. Now that's a major problem. So how do we work upon this area, everyone? For this, what do we do? For this, what we do exactly is we look at the length of the asset lifespan. We'll be looking at the length of the asset lifespan. What is the critical consideration when applying risk and return models? Market beta, diversification of marginal investor, risk premium, or variability of the returns? What's going to be the answer, everyone? The critical consideration that we are going to keep. What would be the answer? In terms of the applying risk and return model, but in terms of the working, you have heard about the term portfolio. Why would I put all the eggs in one basket? Why would I put my entire money into one particular investment area? Why won't I just spread it up in different areas altogether? It will really help us, you know. So when we are trying to do this, maybe this part may face loss, but these may have a positive. That is a profit. So there is a diversification of marginal investor. ठीक है ना? Okay. Now let's move on towards the next point. Done? Chali. Now let's talk about the next point. How, okay, there comes a CAPM model, everyone. Well, how is non-diversifiable risk? That risk which cannot be diversified, risk quantified in a capital asset pricing model. How do we do that? When we talk about risk-free rate, we talked about this. This is all the elements of CAPM model, isn't it? We talk about risk-free rate, beta, risk premium, and variability of returns. You remember this part? Risk-free rate, and then we have the beta, then we have the risk premium, and then we have the variability of returns. In this case, the answer is beta, everyone. The answer is beta. Okay, now what is the common argument against using CAPM model in real estate? Limited sources of real estate developers, overemphasis on risk premium, assumption of only non-diversifiable risk being rewarded, or high transaction cost is real estate. What's going to be the answer in this? What is the common argument? against CAPM model in terms of using it in the real estate. But then when we talk about the real estate now, it's a very different mode altogether. Um, there's only one specific assumption which is taken, and that is actually, see everyone, there is only one assumption of only non-diversifiable risk being rewarded. The risk that is being rewarded is non-diversifiable. Okay. Okay. Now, what is the concern related to the measurement of and utilization of risk parameters for real assets in asset pricing models? Diversification of investors, market beta accuracy, valuation principles, or issues in measuring betas. What is the concern related to the measurement and utilization of risk parameters? When we talk about the risk parameters are related to the market, to the scenario where we are trying to understand the portion of asset pricing. Now, this is talking about CAPM. Again, when we're talking about the CAPM, only one particular thing that we are worried about is issuing the issues in measuring the beta. The risks are too much and they are non-diversifiable. When they are non-diversifiable, it becomes a little difficult to understand that part. You know? So, issues in measuring the beta. What is the challenge in valuing the startups, everyone? What is the challenge in valuing the startup firms, especially those using new technologies? Lack of information on competitors, unpredictable cash flows, established history of earnings, or availability of financial statements. But when startups come now, I think there's an entire portion of the module D which talks about all these unconventional things in terms of the area of financial management. I'm sorry. So when we talk about this area, na, startups have a very major problem. They have lack of information on competitors. No, before you are entering the market, you will definitely rule, and you will try to find other things in the market. Unpredictable cash flows. No. Or technically, this should be the answer because you just started your business. You don't know where would your business land. For example, I've talked about Nykaa earlier as well. Nykaa is basically an example of it's a website which is related to the area of cosmetics own earlier. Now it is a part of fashion as well. When this organization started, it provided all those unique brands which were rarely available in India. Rather, they were not even properly easily available. So they started selling all those good brands, and that too with authenticity. So women really liked that particular cosmetics that they were providing, and they were really of good quality depending upon what you buy. So in suddenly the organization grew, and Katrina Kaif and Alia Bhatt also invested in this organization. And recently, I think it's been just a year, this particular organization went on board and got listed in SEBI. Um, it has now become a public company. During the time Paytm became a public company, it also became one. The difference is Paytm was still facing losses and still continuing to do that, while Nykaa became an organization which went way up. So these are all those firms where things are really unpredictable. It just starts moving. Uh, your organization will grow further or will fail. That is unpredictable in nature. You never know what's going to happen, isn't it? Okay, what is a primary assumption made by traditional risk and return models such as CAPM regarding the marginal investor? Uh, Marginal investor has a low level of diversification. Marginal investor is well diversified. Marginal investor only invest in real assets, or marginal investor has no exposure to market risks. The marginal investor. Oh, visible everyone? I hope it is. See, there is only one assumption that you can keep. Marginal investor cannot invest in real estate. I wish they could, but the point is the amount of real estate is slightly a little higher. Then the marginal investor is well diversified. That's what we'll do. If I cannot do this on my own, I'll have a mutual fund investor who will be taking my work, manager who will be taking care of the diversification, or I would be putting my money. And then I think in India we have these people less, but in outside India they used to have a lot of investors doing all this work for them. So technically, yes, they have this particular opportunity. So the answer to this question is the marginal investor is well diversified. Okay, what does the history of the company earnings and prices help in estimating? Predicted cash flows, competitors' performance, or company's valuation principles, or risk associated with the company. What is the history of a company earnings? See, if we look at the particular company, it has a specific history, and that too, it has a very reputed history. Then what will happen? Then you come to know that this organization is actually a strong organization which has been working in this field from quite a long time. The reputation of that particular organization is definitely outrightly available, isn't it? So, in this case, the answer is going to be risk associated with the company can easily be found out, they can easily be measured, right? The measurement of the risks are easily done because you have seen the history of the organization, you have studied the trend of their work, right? What might be the trade off when dealing with information constraints in valuing companies? Increase in one type of information and decrease in another. Increase in competitors' information, decrease in importance of financial statements, or decrease in historical stock prices. What's going to be the answer, everyone? See, when we talk about the trade-off, that is basically just looking forward towards the balancing area. This is where whenever we have a problem with the information, whenever we try to work upon one specific type of information, the remaining type of information gets affected. So in this case, what happens is increase in one type of information would lead to decrease in another. That's one of the basic things. When cost of everything, na, you have a cost to everything. You want to increase one thing, you will have to focus something else. What is a primary determinant of the worth of a new company according to the section of startup firms? The company's historical performance, age of the company, the current value of the predicted cash flows, or availability of the goods or services. What is the primary determinant of the worth of a new company? Primary determinant is basically section of startup firms. Actually, that would be the history of performance is just not available. It has just started. So technically, this is not possible. Age of the company is 0 to 5 years, where you can just not study about it at all. Startups are basically any organization which is up to 10 years of its age. So in the first 10 years, you cannot really expect something big happening. You must have heard about Book My Show, built in 1999. In 1999 to 2010, I believe, between that particular period for people, having a Wi-Fi at their home was a luxury. Many people didn't really have the phones even at that point of time. Their landlines and all were also very, they were not very common and popular. And at the same time, they were not affordable. When we were a kid, I think I used to see, all of us used to go to a cyber cafe if we really had to work upon the internet. So that's how we used to work upon internet, no? Right? So after I think 2008 onwards, slowly and steadily things changed. And 2011 became the marking area where 2G was introduced and people could access internet in a way better manner. So the age of the company couldn't really determine its success. Till 2011, nobody even knew much about Book My Show. But after that, people realized, that we can book the particular movie through that, or you can at least see which particular seats are available, and then we will go accordingly. Technically, Book My Show became um, a successful organization. I think the particular person who is the owner of Book My Show, he had a specific interview in which he said, someone asked that why did you continue, how could you continue a business for more than I think 10 years with almost no money that you were getting out of it. So he said, that was a very beautiful line. I think that is, I didn't treat my business like a girlfriend. I treated it like a wife. So that is how the particular treatment of the business happened. And Book My Show is now a successful business. So the age of the company really doesn't determine the worth of the new company because its age is not that much, right? If it has been at least 15, 20 years, or I think when we talk about companies like Lamborghini and all, they have lived for more than 100 years. So there are certain companies, there are certain these motor vehicle companies which have been there in the market for so long. They are going good. So that is where you can talk about the age of the company. So the current value of the predicted cash flows. They do not have a fixed cash flow at all. This one is just predicted. कि ठीक है ना? This can be the future cash flows, but this is not sure. So that's the answer for the day. So I hope you like the particular story of Book My Show because I really respected that story. So, acha. Before I end my session, everyone, I hope you know the sale is going on. And if you haven't got the particular course yet, then please go ahead and buy the particular course right away because it's the high time. What you need to do is go into the area of JIB and CIB, click on the area of CIIB, click on the area of Mahapack. Why to buy something else if Mahapack covers all the things? Bilingual English medium, both. Then test series, revision batches, ebooks, everything covered. Then previous batches, current batches, and the upcoming batches even. The pack is available for 12 months. And if you go for buy the courses, it is for 6 months. The price of this course can be further reduced if you use the code Y541. It would come down to 6823.95. 6800 something in terms of the entire year. You are going to pay roughly 568 rupees per month. So since it is for 12 months, technically something which is very affordable. So if you're planning to purchase the CIB course, then what are we waiting for? This is the perfect time. The sale is going on, and you should definitely go ahead and buy the course as early as possible. Till then, thank you so much for being there. Please keep on sharing this particular sessions and don't forget to like it. Thank you so much. Bye bye.